Hello there, welcome to David's Investment Analysis channel. Today I'll be talking about a very trendy stock. The stock is up over 128% this past week and at 1,785% this past month. And the company is GNUS Brands International, traded on the NASDAQ with the ticker GNUS. I'll first talk about the company, what they do, how they earn income, followed by a qualitative analysis discussing why the company's stock went over 1,785%. Then I'll follow up with a quantitative analysis looking at both the financials and valuation and comparing it to its competitors. Then I'll conclude on whether I own any of this business and whether I think the stock is still a buy. If you wish to skip the introduction or analysis, I left a timestamp in the description below, so you can go straight to the conclusion if you like. If you haven't yet, please like, share, and subscribe, and click the bell notification. And if there's any company you would like me to cover in the future, please leave in the comments below. GNUS Brands International is a leading global media company developing, producing, marketing, and licensing branded children's entertainment properties and consumer products for worldwide media distribution and retail channels. They distribute content worldwide in all formats and license a broad range of consumer products based on its intellectual property. They earn revenue through licensing their content, advertisements, and consumer product sales. Now let's look at the portfolio of brands. I have not heard of any of these brands before, but Warren Buffett's Secret Millionaires Club sounds appealing to me. Wish I had the opportunity to watch this when I was young. It's an animated series where Warren Buffett acts as a mentor to a group of kids who have international adventures in business. And Stan Lee's superhero kindergarten should be amazing. He's a co-writer of some of the famous popular Marvel series like Spider-Man, X-Men, Iron Man, Thor, to name a few. Their content is mainly directed to kids between the age of 2 and 11. And have approximately over 4,000 episodes of content. Now let's talk about some of the qualitative aspects and why it went up so much as 2,417% this past month. So just about a month ago, they announced the launch of their new channel called Cartoon Channel, which will be launched on June 15, 2020. The new channel per management will significantly expand the distribution, which currently reaches over 100 million US television households and over 200 million mobile devices. Instead of paid on-demand model, they've decided to earn advertisement income. So the channel is free to everyone, and it'll be on cable, satellite, and many platforms such as Dish, Amazon Prime, Sling TV, Chromecast X Infinity On Demand, Roku, Apple TV, and Apple iOS, Android, and many other ones. This is quite an interesting model and likely would work because I assume children don't mind watching these advertisements. Management expects that the revenue would dramatically increase due to the new way of earning income. And because of the global health issue keeping kids at home, they'll have an opportunity to learn about money, science, cooking, and many other things. In addition to the new channel, there were some positive news about launching of its new toy line at Walmart stores for the original preschool brand Rainbow Rangers. The company anticipates to launch over 450 products over the next 12 months with top-tier manufacturers. Another positive note is that they are working with Alibaba, a huge Chinese conglomerate, on Stan Lee's superhero kindergarten, which is expected to launch on Amazon Prime in the US and Alibaba's Youku in China in 2021. Looking at management team, the CEO Andy Hayward, who has done a lot of outstanding productions in the past, including the Real Ghostbusters, Inspector Gadget, Alvin and the Chipmunks, G.I. Joe, Hello Kitty's Fairy Tale Theater, Sonic the Hedgehog, just to name a few. He's also won several awards for his productions. They also recently just appointed former president of Fox Kids Network, Margaret Loesch, as executive chairman of Cartoon Channel, and David Newman, former president of Walt Disney Television, has been named chief creative officer of Cartoon Channel. I do believe that they have a strong management team in place for the launch of Cartoon Channel. One of the risks I see is competition with other content creators. There's just so much content out there, and they would be competing on view time. Some of them are so much bigger than GNUS. Some of its competitors include YouTube Kids Channel, Nickelodeon, Disney Channel, and WildBrain. Although I do see that GNUS content may be a little bit different because they are more educational and provides a lot of learning. Now let's look at some of the numbers. Revenues have been all over the place in the last 10 years. They have negative margin and income, meaning that their operating expenses and cost of sales are higher than revenue. They have been issuing shares every year since 2014, and this dilutes shareholder equity. similar to the analogy where more people are splitting the pie. If we look at the most recent quarter balance sheet, they have about $2.8 million in cash and about $2.3 million in long-term debt. So they are in a net cash position. But as we discussed earlier, they've been issuing shares consistently over the last several years. So it means that they are financing the company through issuance of shares as opposed to borrowing debt. They have a new $14.2 million warrant liability that may be converted into equity. And on May 15, 2020, the company received approval to convert some of its warrant-derived liability into common shares at 21 cents per share. Subsequent to the announcement of the new cartoon channel, the company on 4 separate occasions raised a total of $47 million through the issuance of shares, further diluting equity. Per press release, they plan to use the proceeds to fund additional episodes of its hit series Rainbow Rangers and to fund the August 2020 launch of the toy line from Mattel at Walmart stores. It also plans to use the funds to fuel the growth of its new cartoon channel. Now let's look at the valuations. It currently trades at 18.69 price to sales ratio and 130.41 price to book value. And this is significantly higher than what it was trading at historically. The price to earnings and price to cash flow is nil because they currently do not have any earnings or positive cash flow. Now let's compare it to its competitor WildBrain, a similar production company with brands including Peanuts, Teletubbies, Inspector Gadget to name a few. The PE, Forward PE, and PEG ratios are all not applicable because they currently do not have positive earnings. On a price to sales ratio and price to book ratio, WildBrain trades more favorably. However, some may suggest that GNUS is growing a lot faster than WildBrain because of the recent announcements, which is true. So on a relative basis, since GNUS trades 166 times more than WildBrain on a price to sales ratio, for it to be traded reasonably compared to WildBrain, it would need a growth rate of approximately 166% in their sales per share. Now let's look at the stock chart. On a 5-day chart, just 1 week, GNUS increased 128% and WildBrain increased 5%. On a 1-month chart, GNUS increased 1,785%, while WildBrain increased 80%. On a 1-year chart, GNUS increased 232%, while WildBrain dropped 18%. On a longer chart, 5-year chart, very interestingly, even after a huge increase in the last month, GNUS is still down 16%. Conclusion: is the stock still a buy after a huge run-up last month? In my opinion, I'm not sure. It depends. Let's look at some of the positive and negative factors. They have a lot of good and educational content for children between 2 and 11, and people say content is king, and I think that is absolutely true. They announced the launch of Cartoon Channel, a free channel on several platforms from cable satellite to Amazon Prime, Apple TV to iOS and Android. And the company would earn income through advertisements. And this channel will reach people globally. As the company grows their distribution and more people are aware of their brands, their product sales will follow and increase. They have a strong management team, many with lots of experience in kids production. Now let's look at some of the negatives. The continued issuance of shares will continuously dilute shareholder equity, more people sharing the pie, even though the proceeds are used to grow its business. The company has not been profitable in the last 10 years, and this is a concern. Even though it is expected that revenues will increase significantly, their operating expenses are also expected to increase significantly because of growing marketing and distribution costs, and as well as creating new content. The company currently trades more than 166 times price to sales compared to the competitor WildBrain, and 3 times more on the price to book ratio. This can be explained by the possible growth of GNUS, but at what rate would it grow? It is still unknown. So it would be difficult to say whether the company is overvalued or undervalued. Like said earlier, for it to trade reasonable to its competitor, it would need to grow at least 166%. Disclosure: I do not own any shares of this company, but I do think this is a fantastic company and is set to grow with its launch of its new cartoon channel on June 15, 2020. Because I cannot determine whether the valuation is reasonable, and for that reason I will wait for some solid quarters and provide more clarity on the direction of the company. That's it for now, and if you haven't yet, please like, share, and subscribe, and click the bell notification. Until then, see you next time.